Picture this. Just yesterday, U.S. Congress triggered a major crypto week with 3 groundbreaking bills, all focused on reshaping how crypto fits into traditional finance, and guess what? Bitcoin surged past $120,000 as a result. Meanwhile, Citigroup made waves confirming it's eyeing its own stablecoin, and that new Genius Act, it's poised to kill yield-bearing stablecoins, potentially saving but also shaking up DeFi. Stick around, hit that subscribe button and tap the bell, because today's video dives deep into all this hot-off-the-press action and how it could change the crypto landscape forever. And let's go to today's first news. The House is now racing through its version of the Clarity Act, a twin to the Senate-passed Genius Act aiming to define which agencies, SEC or CFTC, oversight responsibility goes to. Both the House Agriculture and Financial Services Committees gave green lights recently, pushing this bill alongside other blockchain laws. The goal? Cement a federal structure for how crypto markets are regulated. Supporters say this will boost confidence and attract institutional capital, which could lead to a paradigm shift in banking. However, the Senate still needs to produce its own version. The House overhaul is promising, but long from done. Impact. If passed smoothly, it could finally end regulatory confusion in the U.S., fuel Wall Street interest, and allow markets to run 24/7 with fewer bottlenecks. But analysts warn the path forward includes intense debate on reserve requirements, oversight boundaries, and how to balance innovation with protection. My take, this isn't just political theater, it's a tectonic shift. For traders, compliance teams, and devs, this is potentially game-changing. The market's already sniffed it. Bitcoin rallied as Crypto Week unfolded. Bottom line, clarity breeds confidence, and confident money tends to flow into crypto. Next, Citigroup's CEO Jane Fraser dropped a bombshell. We are looking at the issuance of a Citi stablecoin, and most importantly, the tokenized deposit space. She added that Citi is also actively exploring custody solutions and reserve management for stablecoins. So this isn't theory, it's imminent strategy. They're exploring not only a stablecoin, but also foundational infrastructure, custody, tokenized deposits, basically full-spectrum digital asset services. Why it matters: when a Tier 1 bank moves into stablecoins, it signals serious institutional validation. Citi shares even hit levels unseen since 2008 after this came out. And get this, internal Citi research forecasts stablecoin supply could balloon to $1.5–3.7 trillion by 2030. Analytically, this means legacy banks are joining the crypto race, not just as bystanders, but as leaders. That shifts the narrative. Crypto is no longer fringe. It's mainstream infrastructure. Expect more banks to build, more products, and more interop between traditional finance and blockchain. Finally, the Genius Act, signed off by the Senate 68-30 back on June 17th, does something radical. It prohibits yield-bearing stablecoins in the U.S., limiting them strictly to use cases as basic payment tokens backed one-to-one by cash or treasuries. Algorithmic or high-yield versions fall outside the law and would be classified as securities, triggering SEC oversight. Impact on DeFi? Enormous. Popular tokens like USDE, USDY, SDAI, all yield-bearing, could be delisted by U.S. exchanges. Dried-up liquidity could crush lending protocols. As one analysis put it, DEXs may delist these tokens, centralized exchanges would run dry quickly. Yet supporters argue this ban protects depositors and prevents bank runs, shifting yield products back to regulated institutions. My view, this law could be DeFi's wake-up call. Without yield-bearing tools, DeFi platforms lose a key draw, but it may also drive innovation toward unregulated jurisdictions or push on-chain protocols to offer compliance-friendly paths. This is legal pressure that reshapes the narrative. Risk, decentralization, and real-world resilience. So there it is. regulation accelerating, big banks going digital, and DeFi protocols being reined in. Every player in this space is recalibrating. Right now, imagine a world where crypto isn't just speculative hype. It's woven into the financial backbone. Banks issuing tokens, markets running round the clock, and regulation making a clear playing field. But will DeFi adapt or fade? Will banks outrun nimble startups? And how will retail investors react when there's no more passive yield from stablecoins? Now I want to hear from you. What do you think? Will Citigroup's entry legitimize digital assets or crowd out innovation? Does the Genius Act protect users or kill DeFi yields? Drop your take in the comments below. If you found value today, hit like, subscribe, and ring that bell to stay ahead of the next wave of crypto news.